Crypto Hotep here with another investing video. We're on week 87 of the Family Portfolio and Dividends Tracker. I really appreciate you guys tuning in here. Thank you for tuning in into week 86 last week. I appreciate the views. It seems to be these videos are catching some traction here. So again, I really appreciate the support. Thank you for sharing the videos, sharing the tweets. And just overall watching the videos and putting a like up on the comments and everything. So really appreciate that, guys. If this is your first time watching a video, feel free to go to the channel, go to week number 1, and that's where I go through my whole methodology with how these tracking videos are going about. So basically, in a quick synopsis here for you, I shortlisted several stocks for my family to choose from. I then proceeded, after my family made their choices, proceeded to use M1 Finance as our broker of choice. We created a portfolio that you will see shortly here with everybody's stocks in their own specific portfolio, and in those portfolios build up the family portfolio. Every week we go through this portfolio, we go through news, we go through how we're feeling in the markets, and we go through our buys. We don't really do a lot of buying and selling. This is more of investing in good companies and holding long term and seeing what we can get from the market. Again, guys, this is not financial advice. Please do your own due diligence, and please also consult a professional if you're thinking about investing. But as always, guys, help me out, help the algorithm out, support the channel, share the video, like it, comment, do all of those things for me. But before we go to week 87, and before we go to the week review, we go back to this week to see what's happened during the week. The big thing during this week was the Fed rate cuts. So Feds did cut rates by the predicted 25 basis points. Okay, so we did cut rates again. Fed Jerome Powell announced that, and he also had a presser this week. So I would say the markets reacted accordingly to them, but they didn't end so sharply this week. But we're about to look into that in a second here. A couple things though, other than the 25 basis points that we were going to eventually get. It says the Fed will consider extend and timing of additional adjustments. Okay, I think this is the biggest thing though. Fed is going to begin purchasing U.S. Treasury bills on December 12th, which is today. So they did start buying U.S. Treasury bills. Why is that bullish? Well, that is bullish because it signifies the start of QE. If you remember last week or the week before that, we talked about QT, which is quantitative tightening, meaning that the Fed put a lot of restrictions on their quote-unquote budget, so they didn't really open the purse, if you will, to purchase equities and those type of things. Now, with the announcement that quantitative tightening was going to cease and actually quantitative easing was going to happen this week, this is the start of that. So this shows that there's going to be a lot of liquidity in the markets. The Fed's going to be pumping these markets here, and this is just the start. Fed's within the next 30 days, Fed will buy an additional 40 billion of U.S. Treasury bills, which is very, very bullish. Fed signals rate cuts may be done for now. We will see. I still think a Fed rate cut in January should be justified, but again, we will see. The big thing is these Treasury bills are huge because it pumps liquidity in the markets, and the way that the Fed is going to do this is they're going to keep buying. It seems like they're going to keep buying these Treasury bills until Fed Jerome Powell actually leaves, and then President Trump is going to instill his next Fed chair, which is a person who more than likely is going to cut rates even further. So very bullish indeed. So with that being said, guys, before we go to week 87, let's go back to week 86. Week 86 saw us with a balance of $3,732.64, a market gain of 18.74% money weighted rate of return, dividends earned of $33.38, with a market gain of $422.70. So week 87 saw us, we would dip down a little bit here with a balance of $3,729.39. 18.50% is the money weighted rate of return year to date. We had dividends earned $33.63 and the market gain of $419.45. So what has been going on? So what happened between this week and last week was we did have some dividend payments. We had dividend payments from Microsoft. We had 20 cents here. We also had dividend payments from Sony. Right, so we had 19 cents and 16 cents, and it looks like there was some adjustments here for Sony as well. So 16 and 19 cents, the reason those came out separate more than likely was because of our youngest and middle. They both hold Sony, so they respectively got those Sony payments, which is nice. And then we, last but not least, we did have Moodys. Moodys generated a 20 cents dividend payment. Now again, if this is your first time watching this video and you're scoffing at these numbers like Crypto Hotep, you gotta be serious. 20 cents, 15 cents, like what are we doing? The big thing with us is here with our family portfolio, it's not necessarily about the size of the dividend that we're worried about. It's the fact that we just keep getting the dividend and that dividend is increasing. We want to see that dividend increase because we're going to be increasing our position in that holding. So as long as the dividend payment is increasing in size, we're all good. Because remember, we're holding great value companies and quality companies. Okay? And that's the thing with dividend investing is it's not a sprint at all. It's far from it. It is a marathon. Okay? As always, guys, let's go to that portfolio and we'll go bottom to top as we always do. Bottom is our middle. Our middle has a balance of $487.01. 11.51 is the year-to-date money weighted rate of return. We have a market gain of $29.73. Dividends earned of $4.16. And let's look here. So Target, we've been doing pretty good on Target. I know we're down over 11%, but we've closed that gap even further with Target. Costco, we are down 8.73% year to date. Amazon, we are up over 5.5%, and I think I mentioned this last week or the week before. I said watch out for Amazon. It's going to pop one of these days here, one of these weeks. It's really going to pop, so you need to watch out. It's been in a range for several months now. Amazon has, so once it pops, it's going to do numbers. A lot of investors are very, very frustrated with Amazon because it hasn't mooned, if you will, or jumped up. That, it's taken its time. So Google's up over 116%. Tesla's up over almost 40%. Starbucks were down over 5%. And then Sony, as we just mentioned, we got that dividend payment up over 15% on Sony. Let's go to our youngest. Our youngest is up over 17.66%. Money weighted rate of return, balance of $530.49. Dividends earned of $2.51. Market gain of $54.13. So Tesla, very similar, up over 35% on Tesla. Starbucks down over 3.5%. Apple up over 26% year to date. I love to see that. Costco down over 5%. Sony, though, again, following the trend, up over 20% on Sony. Our youngest stock's doing very good. I'm not mad at that at all. My wife has jumped a couple levels here. So my wife is now in quote unquote third place, if you will, which has been tremendous sight to see. She has a balance of $539.08. Money weighted rate of return year to date of 53.85%. Market gain of $128.27. Dividends earned of $3.85. So it's nothing but winners over here. It really is. It's nothing but winners. There's only 5 stocks. We got Google up over 110%. Pepsi up over 10% on Pepsi. Pepsi is just like the little engine that could. It started in the red. Several weeks ago it was at like 5% or so, and it's just slowly but surely increased here. It found a bottom. Pepsi found a bottom, so it's good to see that's reversing now. Tesla up over 50% on Tesla. Celsius regaining the ground from last week. So last week we were up over 53%. Now we're back up over 64%. Celsius has been my wife's biggest gainer of the year, needless to say. And then Microsoft, we are down a little bit, down over 3.5% on Microsoft. But again, we're building that position. You can see the value here. We're still building that position as we add it to it. Okay, let's go to my stocks. My stocks, we have a balance of $1,083.14, money weighted rate of return of 16.36%, market gain of $109.95, dividends earned of $16.20. So very similar as in last week. Nothing's really changed. Technology, which is Google and Microsoft, they're holding the fort down. Finance, we see a little bit of uptick in the green. Why? Because of Visa. Visa has pumped. Visa was over 6% on Friday, or no, let me retract that statement. I believe they were up over 6% on Thursday, but they had a very good week. Visa did have a very good week. Moodys, as we talked about, with the dividend payment, a little bit down on Moodys, but still want to hold that company, still like it. Industrials and energy, we are down on industrials and energy, but two very well maintained companies. I think we're going to find a bottom in Cintas and Waste Management. Real estate, Realty Group. Hey, I'm sticking with my moneymaker here. I'm sticking with my income driver. That's Realty. So up over 8.5% on O. Pharmaceutical, AbbVie has been one of my top gainers. Crazy gains, up over 30% on AbbVie. I can't ask for anything more. Just love AbbVie. I'm so glad that I made mid-year. I made that change from Pfizer to AbbVie. Really, really glad I did that. Really glad. Consumer staples and shopping is just Lowe's and Costco. Costco, we are down over 10.5% on Costco. Lowe's, we are up over 17%. Costco, watch out for Costco. Costco actually had really good earnings this week. Again, they had a double beat. They beat on their earnings and they beat on their revenue. Again, as I mentioned before, Costco will always Costco. No matter if it's 2025, no matter if it's 2015, whatever it is, Costco's going to keep chugging along and do what it does. And then restaurants and food, guys. Restaurants and food, we have the GOAT, Coca-Cola, up over 14%, 14.5% plus, and year to date. And then Domino's Pizza. Again, we're trying to find our footing with Domino's Pizza. Not really worried about that at all. So all in all, I'm liking my portfolio. Nothing's really changed between this week and last week. We may see some fireworks next week, though. It's a deposit week, so who knows? We may see a couple surprises. Last but not least, let's go to our Otis. Our Otis has regained the top balance out of everybody, $1,089.67, up over 12.79%, money weighted rate of return year to date. Dividends earned $6.91, market gain of $97.37. Very good to see here. What I like to see is I do like to see the money weighted rate of return increasing. I like seeing that. That makes me feel really good. Apple is up over almost 20% on Apple. McDonald's is still trekking up over 10% on McDonald's. And then Costco, everybody's down on Costco. Costco's red in everybody's book here, down almost 7% on Costco. But hey, that's okay when you have a game winner like Tesla making up for it at over 22.5% gain. So again, very simplistic portfolio as it's always been, but you can see the definite increase. We started over here at 600 and then just slowly but surely has gradually increased the balance. Love to see it. But as always, guys, week 87, as a recap, we have a balance of $3,729.39, money weighted rate of return of 18.5%, market gain of $419.45, and dividends earned of $33.63 for the family portfolio. If these videos were helpful, guys, it feels, one thing I will say, there I've got a few comments on the videos that they're helping people stay consistent with their own investing. They may not be investing the same thing we do. I don't vouch that you do. Again, this isn't financial advice. You need to research it on your own. But it feels good to know that people are actually watching them, and it's encouraging them to stay the course with investing, because certain times things can get rough in investing. Everything could be red. Your whole portfolio could be down for weeks, months on end. But if you stay the course and stay with your investing muscle, and as Charlie Munger said, the first rule about compounding is not to interrupt it. That goes right here. That goes for what I'm speaking about right now. If you don't interrupt that investing muscle that you have, and you still invest even in the good times and the bads, obviously if you have money to do so, then in the long run you will be completely fine. So I'll get off my soapbox, guys. Again, if this video helpful, feel free to like, subscribe, comment. Let me know what you think. Let me know what you want to see. Let me know what you guys are investing in too. As always, thank you. Happy investing, guys.